Hey guys, welcome back. We are still continuing with question 6 of the November 2017 question paper. We are dealing with the cash budget and projected income statement. This question here is going to be based on the projected income statement. Let's dive in. So refer to information C and D. It says calculate the fixed percentage of sales used by Larry to budget for delivery expenses. And then secondly, calculate the loan amount to be repaid on 31 December 2017. So let's start with the fixed percentage on sales and C. So let's go to information C and D. So information C, you can see this one, it might actually relate to the loan, if we're going to use that for a calculation. And then information D, so these are projected sales, 220,000, and then this is your projected delivery expenses. So in order to calculate that percentage, you just need to say 12,800 divided by 320,000, and that is 4%. So to answer your first question, that was quite straightforward because you calculate the percentage of delivery expenses to sales. So 12,800 divided by 320,000. And they said to budget, so you wouldn't use, because you can see the information that you're given here is projected, and then this is the actual information. So you'd use the projected information because they asked you about a budget as well. Let's just say, obviously you times that by 100, and then you would get 4%. 4%. All right. Say calculate the amount of the loan to be repaid on 31 December 2017. All right. Let's go. So here, there's no information where they actually tell you that the loan amount is this amount, but you can see that there's an amount being paid because you can see in November, the interest amount is 2,975 and it's calculated at 8.5% interest per annum. And then the same in December, and then it decreases in January and February. So the reason why it would decrease it would be because you paid some of the amount of the loan. Now you're calculating, so now interest for January and February is being calculated on a lower principal than it was in November and December. So what we need to do first is to figure out how do we calculate the monthly interest. So the way to calculate the monthly interest, I'll just write it at the bottom of the page. So the way you would do it is, obviously we don't know what the loan amount is. So I'll call that a loan amount, I'll call it L. And then I'm gonna say, we obviously multiply it by 8.5% interest, right? That is quite clear. And then we multiply that by 1/12 because we're calculating interest of 1 month in 12 months. And then that would give us, in the case of November and December 2017, that amount would have given us 2,975, right? So if in this example, then we make L the subject of the formula, then we'd have 2,975 divided by 8.5% multiplied by 1/12. So if you put that in your calculator, your L is going to be equal to, you're gonna end up with an L that is equal to, your L is going to be equal to, I have this calculation here. So I have this calculation here, but I need to make it again. So let's pause. Okay, I just had to confirm my calculation there. So the that loan was actually 420,000. So if you take 2,975 and divide by 8.5% multiplied by 1/12, because you divide by the same thing on the left-hand side as well as the same thing on the right-hand side. Cool. And then you see now that in January that amount reduced. So we still don't know what the loan is. So we still don't know what the loan is, right, in January, but we can multiply again by the same 8.5%, and then multiply it by the same 1/12. But then the difference now in this case, it will be 2,465, right? So if it is that 2,465, and then we divide by that 8.5% multiplied by 1/12 again, we would have a loan that is equal to 348,000. 348,000. So you can see that the loan in December and November was 420,000, and then the loan in January is 348,000. And therefore, to calculate what the balance of the loan is, you would have to say the amount that was paid. Sorry, so the amount that was paid would be the difference between the 420,000 minus the 348,000, and that should give you an amount of 72,000. So 72,000 is the amount that was paid in December. All right, let's move on into the next question. So the next question, it says, so I've answered this one. So they say, explain why Larry would feel that all these variances are problems for his business. So basically, if you look at this whole projected statement here, there's variances. There's no variance for packing material, but why are they all problems? So let's assess that one. So first, sales. So let's look at sales. So sales are made up of cash sales and credit sales. Cash sales, we missed the target by 46,000. And then credit sales, we overachieved the target by 16,000. So this tells me that we are not achieving our cash sales, but we are overachieving our credit sales. So that may result in cash flow problems. So that's what I'll say. So we missed the target. We missed the target cash sales and exceeded the target for credit sales. This has the potential to result in cash flow problems. Remember, guys, that when you do a cash budget, for example, is that you do a cash budget so that you can estimate how much earnings that you're going to get over a period of time. So if now you're expecting to make cash sales for an amount of 96,000 and you end up only making 50,000, you won't be able to pay the expenses that you had planned to make. And also, if you had planned to repurchase, you cannot purchase with an amount that is on credit because you actually don't have the money. So that would be the problem. So we dealt with sales. Let us deal with advertising. So advertising, we had planned to spend 5,000 on advertising, but we ended up spending 1,000. This is a saving, but it's a problem because this advertising led to the business not being able to achieve its target sales. So we'll say advertising budget was underspent and it resulted in the business not achieving the target sales. So also, you would want, maybe you might be tempted to say something positive, but it's important that you stick with what the question says. It says, explain why Larry would feel that all these variances are problems for his business. So you want to highlight the part that is a problem. You don't want to highlight the fact that well, we save money. That's positive to save money, but what that saving that money led to the business not being able to make enough sales as the business had planned. And then packing material. So for packing material, seems like we're stuck with the plan. We spent the same. So we budgeted 4,800. We ended up with 4,800. But if you budget for packing materials for 4,800 when you actually planned for sales of 220,000, if you do not achieve those sales, shouldn't you also have underspent a bit on packing materials? So surely you should have been able to save on the packing materials because you didn't achieve the sales. So we'll say no variance for packing materials while the projected sales were not achieved. This indicates that there was a waste of the packing materials. And then last but not least, delivery expenses. We budgeted 12,800 and we managed to spend by 300 less. So obviously we didn't make our sales, so we would have expected that if we didn't achieve the sales that we wanted to achieve, then we would have spent less on delivery expenses. But here is the problem. So we did not achieve sales. We missed sales by 9.4%, but delivery expenses, we only managed to save 2.3%. So when it comes to delivery expenses, we're going to say that not efficient. The business missed sales target by 9.4%. 9.4%. And you can calculate that by actually taking that 30,000 and then divide by that 220,000, which we actually wanted to achieve. So we missed the target by 9.4%, but the business only managed to save 2.3% of the delivery expenses budget. So yeah, that is the problem that I did identify. The other problem you could identify, what I did, so in the first question, we calculated the percentage of the delivery expenses to sales. It was 4%. And then if you do the same for the actuals, you'll find that it's 4.3%. So you can also point that out that we should have been able to keep that 4% the same if we're efficient when it comes to our delivery expenses. And then that brings us to the end of the whole question paper. Thank you guys for joining and thank you for tuning in. Make sure that you keep practicing and make sure that you also go back in past videos so that you can access all the videos that we did on this question paper. Thank you again. See you in the next video. Cheers.